London Metal Exchange are recovering quite good after we saw some heavy price corrections on Thursday. The focus was, of course, on nickel, as we had some severe price corrections during the last days. Nickel prices plunged in London and also in Shanghai on rising battery-grade supply outlook following a major supply deal in China. And although nickel is recovering this morning about 2% plus, we saw it was on track for the biggest weekly loss since September 2011, after shedding a combined 14% loss in the previous 2 days. That was mainly due to the fact that the Chinese company Tsingshan Holding Group said it would supply about 100,000 tons of nickel mate, which is actually an intermediate product which can be used to make a battery-grade nickel for electric vehicles, to 2 other Chinese firms within a year from October on. What an analyst said from ANZ was the ability to produce a nickel product in form that battery makers can utilize from a laterite nickel resources could be definitely a game changer for the industry, and that is one of the main reasons why we see those heavy price movements during the last days. There are signs of demand cooling down in the base metal sectors. Exchange inventories of copper in China have recovered, and also the spot premium has flipped to a discount. So copper product inventories are up, which could actually discourage fabricators from buying at those high level or at these elevated prices. Right now, copper is in the plus 2.8%, trading at almost $7,400 a ton. Aluminium is at $1,011. That's a plus of more than 1.5%. As I said, nickel is more than 2% up, trading at $13,580 a ton. Zinc is up 1.5%, trading at $2,307, the 3-month price. Lead is up 1.75%, trading at $1,704 a ton. While tin is up 2%, trading at 19,910. Almost back to a 20,000 level, which we have in the cash prices, as we still have a backwardation of about $1,200 between cash and 3 months on the tin price. If we look briefly at the precious metal prices, gold also declined to a 9-month low on Friday, and that was set for a 3rd straight weekly decline. Why? Because the dollar and the bond yields have rising after Jerome Powell from the Federal Reserve remarks that the rise in yields were not disorderly. So spot gold is right now trading and steady at the price level of about $1,697 per ounce, and having earlier fallen to a lowest since June 8 at the $1,686. So for the week so far in gold, we are down about 2%. If we have a brief look at the currency side, we can see again the US dollar index is of course rising after the Fed speech from Jerome Powell, as I just said, which brings actually the euro against the dollar down below 120. We have been this morning already at 119.21, the lowest. We are right now a little bit above at 119.31. So that's also a pretty heavy decline in the euro. And that brings us to the economic calendar. If we'll have a look at it today, we had already some positive news in Germany on the factory orders in January. They have been up 1.4%. Previously, we had a minus of 2.2%, so that's a little bit encouraging for the economy. Later on today, we will have in the United States some important data regarding unemployment rate, the non-farm payroll figures. We will have also some figures on export and import in the United States, and there will be also again some data from the Federal Reserve coming out. Have a nice weekend up front.